Gary Wagner joins us ahead of non-farm payrolls to tell us how he sees gold set up ahead of the big data. Gary, thanks so much for being with us.
It's great to be here also, Daniela.
So here we are talking ahead of non-farm payrolls. Some would say it's the biggest data point this summer. What do you think will happen?
Well, I'm not sure what will happen, and I do agree it's going to be a really important number that comes out. We did get a clue, though, earlier this week when we got private numbers that came out with new jobs this month at about 190,000. The key, though, is it came in a little bit under expectation. And of course, if we get some numbers similar to that, meaning under expectation, it really doesn't bode for any kind of a rate hike to be implemented, whether it's September or even next month for that matter.
Well, Gary, what about the ECB conference we had on Thursday, which many saw as the central bank leaving the door open for more QE? Could this at all impact the Fed's decision to raise rates?
Well, I think the Fed tries to act independently of other countries. And you also have to realize that the quantitative easing program that was started in the EU came in much later than ours. In other words, we were at the tail end of that when they really started to ramp up. So I'm not so sure that that is going to affect a decision by the Fed.
Now, until the Fed pulls the trigger, do you expect volatility to continue here in the gold market?
Absolutely. We've seen a lot of volatility within the precious metals complex as a whole. Of course, we've got the equities markets under extreme pressure last week. This week, we're trying to recoup. And so I think that a lot of eyes, though, are on the equities markets because remember, back in 2008, 2009, and I am in no way comparing the two corrections that we're seeing, but if you remember, we saw gold under extreme pressure as the equities market sold off. Then when quantitative easing kicked in by our Fed, we saw both the equities and gold really take off. And so I believe that gold is extremely sensitive right now to what's going on in the equities markets here in the United States.
And Gary, you brought us a chart of the week, and I'd like to pull it up now to show us and tell us what you're seeing here.
Well, the key to the chart that I pulled up, it's a daily chart, but the key is the fact that we've now moved back under the 50-day moving average. That is that one blue line that's coming across. And that's a pretty critical component. I think on a technical basis, we now have gold back under pressure.
All right, Gary, thanks so much for your thoughts this week. We'll see you next week.
My pleasure, and I do want to wish all of our Chartist viewers a great weekend, and for those in the United States, a prosperous Labor Day weekend. We'll talk to you next week.
And Canada too, Gary, a long weekend for both.
And Canada too, I apologize.
Thanks so much, Gary, and thank you for watching this week's edition of Chartist. We'll see you on Tuesday.